COQ might be entering its most important phase in months, and the chart is starting to quietly reveal it. This week has actually been really interesting for COQ because even though price hasn't exploded upward yet, the behavior underneath the surface has changed a lot compared to the earlier stages of the downtrend. A few weeks ago, the chart looked chaotic. Heavy red candles, strong momentum downward, emotional selling. It genuinely looked like sellers completely controlled the market. But now the structure is slowing down. And that slowdown matters more than most people realize. The biggest thing standing out this week is how consistently the 9.1 million market cap area keeps getting defended. Every time price starts drifting lower, buyers step back in surprisingly quickly. Not aggressively enough to start a breakout yet, but enough to stop the market from collapsing further. That's usually a sign that stronger participants are still active. And honestly, the candle structure backs that up. We've started seeing more lower wicks, smaller red candles, and weaker follow-through after sell-offs. The downward momentum that looked dominant earlier is starting to lose strength. Instead of sharp breakdowns, price is now compressing tighter and tighter inside this descending structure. And compression phases are important because they usually don't last forever. Eventually, the market gets squeezed into a decision. Now here's where things get even more interesting. The wallet activity we've been tracking throughout all these datasets is still alive. The same recurring wallet clusters continue appearing around support zones, and infrastructure wallets are still routing large amounts of liquidity through the network constantly. That's important because dead ecosystems usually become quiet. COQ hasn't gone quiet. The network still has active routing, active liquidity circulation, recurring support activity, and continuous infrastructure movement. So while the chart itself still looks weak at first glance, the underlying behavior actually looks much healthier than pure price action alone suggests. At the same time, though, this is not breakout confirmation yet. That's the part people need to understand. Right now, COQ looks more like it's building pressure than releasing pressure. The market still needs a real catalyst before momentum fully returns. That could be stronger avalanche sentiment, larger buy activity, breakout volume, or simply enough time for active supply to tighten further. Because once meme ecosystems finish compressing, they usually don't move gradually afterward. They move violently. And honestly, the next few weeks could end up deciding whether this entire structure turns into a major accumulation base, or one final weak holder shakeout before expansion. The key level still remains around that 9.1 million support zone. If buyers continue defending it while momentum slowly improves, the probability of a breakout attempt rises significantly. But if support fails cleanly and recurring accumulation wallets disappear, then the market probably enters another temporary downside phase first. Right now, though, the strongest overall signal this week is pretty simple. COQ still looks structurally alive underneath the chart. And that's a very important distinction. If you want weekly deep dives like this, tracking the wallets, momentum, liquidity movement, and market structure in real time, make sure you're following now because the next few weeks could get very interesting.